NZD USD broke below 0.59 as Iran, US tensions pushed traders toward the safe haven US dollar. The NZD USD Weakens story is worth attention because NZD USD weakened below 0.59 as geopolitical tension increased demand for the US dollar and pressured the risk-sensitive New Zealand dollar. The tension is practical. NZD USD broke below 0.59 while safe haven flows favored dollar. The useful read is not hype or a prediction. It is the gap between the confirmed change, the mechanism behind it, and the signal that would move the story forward. That gives viewers an immediate reason to care. The headline touches NZD USD move, but the pressure point is 0.585 support. The confirmed baseline is narrower and more useful than the headline. The supplied setup places support near 0.585 and resistance near 0.592, with the dollar index described as rising above 104.5. That baseline matters because it gives viewers the starting facts before claims or market reactions take over. The strongest supported signal here is below 0.59, while the current status is dollar bid. Those details set the boundary for what can be safely said right now. They also stop unsupported numbers, timelines, or outcomes from slipping into the story. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The mechanism behind NZD USD Weakens is this. In risk-off trading, capital often moves toward the dollar's liquidity, while commodity-linked currencies can weaken as growth and trade concerns rise. In plain English, the story is not only about the actor or asset on the screen. It is about how access, liquidity, compliance, yield, security, or policy pressure changes behavior. That mechanism is why risk-off demand lifts us and why commodity currencies weaken. Without that link, the event would be a headline with no clear market or user consequence. The impact lands where the mechanism meets real users or markets. New Zealand exporters, importers, and FX traders are exposed because a weaker Kiwi changes hedging costs and the local currency impact of imported energy. That means Kiwi traders watch support, and the practical consequence is that import costs can rise. This is the part of the story that viewers can actually use because it identifies who is exposed and what changes for them. The focus stays on NZD USD and NZD USD move rather than a broad claim about every crypto asset. The open question is not a side issue. A diplomatic de-escalation could reverse safe haven flows quickly, so the break below 0.59 is not a guaranteed one-way move. The confirmed piece should not be stretched into a bigger claim than the evidence supports. Right now, de-escalation could reverse it. Support holding clarifies pressure that distinction prevents speculation from being treated as a settled outcome. A cleaner confirmation would come from the stated trigger, not from a louder interpretation of the same facts. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. For NZD USD Weakens, the next signal is specific. The next signal is whether NZD USD holds 0.585 support or rebounds above 0.592 as geopolitical headlines shift. The near-term trigger is 0.585 is key because it tests downside follow-through. If that signal appears, the story moves from claim or setup into confirmation. If it does not, the safer reading is that the pressure point remains unresolved. Until then, the closing read is simple. Track 0.585 support before treating the outcome as settled.